As overseas markets continue to lurch from one bout of pessimism to another, still being driven by volatile oil prices, as well as diverging central bank messages, the local focus was on our central bank, which stoically left rates on hold and delivered a message of relatively positive conditions locally. The RBA did acknowledge, however, that falling commodity prices were adding to the decline in our terms of trade. In other words, a fall in the value of our exports versus the cost of our imported goods. They also talked about the heightened volatility in the markets and lower risk appetite, and tougher funding conditions for emerging markets, which in tandem with China's slowing economy remains the main cause of unease in global markets. What does this all mean for interest rates here in the near future? The RBA moves rates to encourage price stability, to drive growth, and to encourage full employment, while keeping inflation in check. Looking at these factors, inflation isn't a problem right now, growth is below trend but still positive, and the jobs market has been improving. And that's the key. A sharp decline in the jobs outlook would be the most likely cause of a further cut in official interest rates. So the RBA will be closely monitoring for whether the turbulent markets overseas is undermining the recent progress in labour markets. A link with all of this may be the housing and construction outlook, which in the latest data showed a flatter result at year end, with Sydney prices off their recent peak and also a softening in Perth and Darwin in particular. The residential construction industry has been a key driver in job creation in this cycle, as has the wealth effect for consumers through housing values. So this in turn has implications for business conditions and demand. With building approvals falling, it will be interesting to see if this is the start of a healthy levelling off of the property boom or something less welcome. The quarterly NAB business survey, fresh off the press, still showed a positive business outlook, although this was prior to the January market roller coaster ride. But the latest Dun & Bradstreet business expectations survey was more circumspect, with falls in the sales and capital investment expectations, but a rise in the employment outlook. To summarise, a challenging equation for the RBA and also for businesses, and the jobs market looks the best barometer for all of this. The next official employment figures are out on February the 18th. Until next week, that's the market update from Bendigo Bank.